Hi, everybody. I'm Jeff Weber. I'm the president and founder of JJJ Investing Services. We will help you learn a unique contrary way to invest called AIM, which stands for Automatic Investment Management. It's a way to be contrary in the stock market, which means you're going to buy when prices go low and you're going to sell when prices go high. Well, AIM has worked very well for years and years with calls because we had a very good bull market for many years after the end of the financial meltdown in 2008 and 9. But over the last year, the bear market returned, and pretty sharply, mainly due to a rise in inflation, the war in Russia, and supply chain problems. So we've had pretty much a bear market for the last year. Well, the beauty of AIM is that we use options to invest. Well, there are two sides to options. You can buy calls or you can buy puts, and I'll explain the difference between the two of them. Calls are options that go up when the stock goes up. So most of the time, the market is bullish, so you want to own calls so you get higher prices on your calls when the stocks go up. But when you have a market like we've had for the last year, your calls will go down sharply. And I noticed at the end of September, one of my LEAP portfolios, the in the money portfolio, had actually fallen 528% in 1 month. That got me thinking and realizing that the bear market had been going on for about a year. And so I decided to see how AIM would do if we had switched to puts at the beginning of the bear market. Luckily, there's an easy way to look up how LEAPs have performed for the last year on Yahoo Finance. So I took 10 of the leading, I took the 10 from the in the money portfolio, and I looked them up over the last year and found out how the put prices had done for the last year. And I was amazed to find out that if you had done AIM with puts for the last year, you would have been up 91%. So you would have made a gain of 91% over the last year of the bear market. So the flexibility of AIM is that you can switch quickly from calls to puts, and you can take advantage of whatever the stock market is giving you. And then you can switch back, say, from puts to calls when the bull market returns. And now I'm going to go in a little deeper and explain the difference between puts and calls. A great example or analogy of the relationship of puts and calls is you looking in the mirror in your bathroom. What you see looks identical to you, but it's actually a 180-degree reversed image of what you see you're in a picture or something. So if you hold up any kind of text to a mirror, look at how weird the text becomes, and you get an example. So like I said earlier, they're not very different or very complicated. All a call is it gives you the right, and the same with a put. All an option is it gives you the right, but not the obligation to buy the stock at a certain price. Well, if you think the stock is going to go up in the future, you obviously would want to buy a call. So you might buy a call with a strike price, and all the strike price means is that you have the right to buy that stock at that particular price anytime before the option expires. And the options we are using will not be expiring until January 17th, 2025, which is over 2 years away. So we have plenty of time. Well, the beauty of calls and puts is they have many different strike prices, so you can choose the right one for AIM very easily. I tend to favor a strategy of using both puts and calls at or near the money. I found you get the best movement from both of those by using strike prices near the money. And again, with puts and calls, you're going to use exactly the same spreadsheet. If you just looked at your spreadsheet, you would see no difference, because AIM is done exactly the same way with puts as with calls. So now I was promising you to tell you more about puts and calls. A call, like I told you earlier, goes up when the stock goes up. Just yesterday, we had a stock market, the Dow Jones went up its most in a year, went up 1,200 points yesterday. And one of my clients had a nice sell on his Microsoft that went from $10 to $16 in a very short period of time. At the same time, I can show you examples on spreadsheets for clients where their leap is literally down over 90%. The call leap is down over 90%. So volatility sometimes can work against you in options. So that is why I recommend that you use a bull and a bear strategy with AIM. And again, with puts, the opposite happens. As the stock goes down, the put will go up. And maybe now, Brett, put up that spreadsheet, and I'll go through it to show people some examples of. Here's how the puts did for the last year using AIM. I use tried and true ones like Apple, Goldman Sachs, Bank of America, Morgan Stanley. Well, Bank of America, and I started each one with an arbitrary 100,000, so it'd be easy to do the math. Well, Bank of America in 1 year went from 100,000 to 141,000 for a 41% gain. Netflix did the best of any of them. It went from 100,000 to 501,000 for a 401% gain. PayPal went from 100,000 to 221,000 for 121% gain. And TQQQ, which is an index ETF that follows the NASDAQ 100, was up 116%. So there's ways to make money in the stock market all the time. You just have to use your brain. And once you have a great strategy like AIM, you can make it work for you in a bull or a bear market.
Okay, thanks, Jeff. So for those who haven't seen our videos before, I'm Brett Hofstadt. I'm Jeff's business partner, and I help him with a newsletter that he publishes every month that
And he does a great job. I want you to all to know that. Wait till you see the beautiful newsletter he produces from my scribblings.
okay, thanks, Jeff. And you've been doing your newsletter for over 29 years now.
Yeah, next month will be 30 years of doing the newsletter. So I'm proud
fantastic.
of that.
Yep.
And the results have always been there. Even right now, the In the Money portfolio that started about 16 years ago, because leaps have only been around maybe 16, 18 years. So before that, I was doing the newsletter with stocks. But luckily, I discovered leaps, and luckily, somebody invented leaps, and that works much, much better. Why? Because the basic reason you want to do leaps instead of stocks is because leaps are only on average about 25% the cost of the stock, and the volatility or profit level is 5 or 6 times higher with leaps than it is with the stocks. So that's why the In the Money portfolio, despite going through 2 bear markets, because we also had a bear market in 2008 and 9 called the financial meltdown. But even going through those 2 bear markets, the In the Money portfolio is still up 1,868% over 16 years. And all I have time to do with the model portfolios in the newsletter is arbitrarily check the prices once a month. So spending maybe an hour a month has produced results of 1,868% over the last 16 years. And I think that's pretty amazing. It's pretty consistent. It works. And you got to realize, AIM not only is a contrary investing method, but it's a long-term contrary investing method. So unlike the current world we live in, where everybody needs instant gratification, and if something doesn't happen in 15 minutes, what the hell's going on? What you got to think about is when you do AIM and you sign up for AIM, not only can I help you learn it and do it right, I can show you the philosophy of it, and I can show you that what you want to care about is where will you be 5 or 10 years from now, not where will you be 2 or 3 weeks from now. The only time you really want to be concerned about the short term is if maybe you want to switch between calls and puts. I can talk to you and explain to you. And I've even got clients with a hybrid portfolio. They have a couple of calls, and then they also have a couple of puts, because every now and then, not all stocks will perform exactly the same way. So some of them I might think are better candidates for a put right now than for a call, and vice versa. I might think some are better for calls right now than puts. Obviously, my buddy was happy I kept him in Microsoft calls, because he had bought 6 contracts less than a week ago at $10, and now he's selling 4 of them less than a week later at $16. Well, the simple math means in a week he made a $600 profit on 4 contracts that he bought at 10 and sold at 16. So that's the beauty of AIM. And I can teach it to you, and I'd love to teach it to you. And
And Jeff, I think right now, if people go to your website, jjjinvesting.com, they should be able to find a special offer to get your newsletter for a trial subscription. Is that right?
Yes, you can get, I think we give them 3 free issues. And as a bonus, you'll get my first book absolutely free, because I have written 3 AIM books so far, 2 of which I sell and 1 of which I give away. So my free book is a great introduction to AIM. It will teach you everything you need to know. It has a wealth of great information in it on many topics, including options. So I urge everybody to go to my website, get my free book, and learn AIM, because It's the perfect way to invest in any type of market.
All right, great. Well, thanks, Jeff. And I see you have your latest book next to you there, Aim for Millions with Stock Options. Yeah.
This is my latest book. I'm very proud of it. Brett did a wonderful job helping me make this very, very readable, because it's always good to, I tend to know too much about AIM and make it too complicated. And Brett probably doesn't know enough about AIM yet, but he knows enough to be a great editor and ask obvious questions that I would never think about for people who are not as familiar with AIM as I am. So we're a great team.
Yep, thanks, Jeff. I'm privileged and happy to work with you and to learn AIM from you too. It's been a great value for my retirement savings. And
yeah, and go to my YouTube account, sign up, because we're going to constantly add videos as we think of new and interesting AIM topics. I love doing this stuff. I'm a ham at heart, so I love putting these on, and I love helping people. I even taught soldiers and airmen at Ramstein Air Force Base in Germany, which I'd love to mention since today is Veterans Day, and I'm a Vietnam vet. So I, and I worked for the Army mostly as a civilian for 35 years. So I got to see how tough it is to be in the Army and live the life of a soldier. So I hope all of you say hi and wish a nice Veterans Day to any veterans that you know.
Thank you, Jeff. Thank you for your service. And we're going to sign off now. So thanks for watching, everyone.
Yeah, thank you very much, everyone. We appreciate it. And if you ever have any questions, please email me or phone me. I'd love to help you.